Kotak Mahindra Bank is the top Nifty gainer after latest shareholding data indicates headroom for foreign investor inflows. An increase in the MSCI weightage may be likely in its May review.
Torrent Power surges in trade after reports suggest it has emerged as the lowest bidder for a 1,090 megawatt gas-based power project.
Bank of Baroda gains 3% as its business momentum continues in the fourth quarter of the last fiscal year as well. Deposits up 15% compared to last year, while loan growth comes in at 17%.
Philpa Medicare is up close to 10% after the company secures US FDA nod for one of their tablets, which is a drug that's used to treat arthritis. The market size of that drug is $3.5 billion.
Kalpataru Power up almost 5% after the company gets orders worth 3,100 crore rupees in both March and April. Projects include civil works and water supply projects, among the others.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and join me as always is Mangala Malu. Well, let's get straight to our first corporate that we're getting on the show, Neogen Chemicals. They have entered into an agreement with a Japanese company to acquire technology to manufacture electrolytes for lithium batteries. Well, under the agreement, Neogen will obtain the license to manufacture up to 30,000 metric tons of electrolytes a year. My colleague Sonal got in touch with Mr. Kanani, the managing director of the company, began by asking him about the details of this agreement and the kind of capex Neogen was planning on undertaking. Let's hear them out.
So we've been working on this agreement like for last 1.5 to 2 years, and we are very happy and excited that MUIS has chosen as Neogen as the first recipient of a license which they have given ever for this electrolyte production technology. They've been producing these electrolytes for almost 30 years, and they are one of the global leaders in this area. So we are very happy to get their technology. The technology license is basically a manufacturing technology license. So they are going to basically share the know-how. They are going to share design of the plant and the process technology for making this. And the license is basically perpetual. That is once up to 30,000 metric tons per annum production. So till the time the plant is making 30,000 metric tons per annum, we don't have to pay any additional license fee. So it's a one-time license fee, which we'll have to pay in certain installments as subject to some subject to achieving some landmarks between the period when the plant is getting constructed over a period of next 2 years. But once it's paid, then this will be for perpetuity. And if we want any additional capacity increase, then we'll have to pay. Or if there is any technology upgrade from their side, we'll have to pay for that.
Okay, interesting. So when you say these payments will be made basis some amount of, levels that you reach or some sort of milestones, can you explain that to us, what those milestones are? And what is the license fee here? Any sort of royalty that you will be paying to them as well?
The milestones will be basically just any project milestone. So in the beginning, there'll be some fees upfront, then the design gets paid, and then, when the entire process is over and the plant is ready. So it will be like in some 2 or 3 different milestone-based payments we'll have to make. The royalty is not to be paid because this is mostly a manufacturing agreement. In addition to that, if we are using any of their recipes, and basically if one of our customer wants to use their recipes or something like that, then there will be a separate agreement for the recipe, and that will have a royalty component.
Okay. I'm trying my luck again, but I really wanted to know what the impact on your balance sheet will be, right? Because you are paying them something. So your investors would want to know what is the amount that you are paying to them for this technology. So can you tell us that? And also, is it only for manufacturing to customers in India, or do you have a market outside India as well for this?
So, what we'll be paying will be part of our capex. So it will be part of the capex which we'll be doing for electrolyte, since this is basically a manufacturing technology license. Of course, the royalty, if at all, subsequently, whenever we do the electrolyte recipes, that will be a separate, and it will be negotiated at that point in time. In reference to your, your second question was again?
It was whether it is only for the Indian markets, or you can use this technology to export as well.
Yeah, so, electrolytes worldwide are basically always made locally because like electrolytes require very difficult, very low temperature, very low moisture content, and also sometimes they need to be transported under temperature controlled conditions. So under such conditions, worldwide, most of the time electrolyte is produced locally. So we also always shared that when we are talking of electrolyte solutions, we are mostly targeting the India market. So currently the license is only for India. If at all we have to do internationally, then we have to set up a plant also internationally, which currently we are not intending. Our electrolyte focus remains India, and therefore the license is also restricted for usage or to make electrolytes and sell within India.
Okay, so it is within India only right now. So when you say it is out of your capex, so you had earlier said that 150 crore is the capex that you'll be making. How much of it will go in this particular agreement?
So, earlier we had actually shared around 450 crores of capex, which we are going to do for setting up a 10,000 metric tons per annum capacity. That was on our own technology and on our own plant, as well as in this 10,000 metric ton, 450 crore, both electrolyte as well as electrolyte salts were included. So now that, we've already signed this agreement is for 30,000 metric tons per annum capacity. So we will be discussing with our customers what is their requirement, and based on the customer feedback, we will decide whether it will be like a phase-wise, it will be complete. Also in the next few months, we will also understand the difference in our own investment versus what investment is required for the Japanese technology in their plant, because the plant design will be shared in more detail. So once this detail is clear, in the next few months, we will share our revised electrolyte investment capacity, as well as the investment, how it will be phased out, and this will be part of that.
Got it. Take your point on that one. What would the revenue potential be with this one, this new product or the technology that you're taking up? You'll be able to give it to your customers. At peak capacity utilization, you are saying that it will commence by FY25. What is the revenue potential here, and will this be a margin accretive product for you?
So, we said our estimate is that we are targeting to complete this by 2025. So it will be most likely FY26 versus FY25. 2025 is a calendar year. In terms of revenue, we already guided that our estimate was to reach around 10,000 metric tons per annum, let's say by FY26, FY27, by which we can get a revenue of around 1,000 to 1,200 crores. Now with this agreement, we have to again discuss with our customers and review our timeline. So as of now, we feel it will be similar to what we had announced earlier or better if more customers agree to sign with us and if the demand increases. So it will be at least that much or more. But the revised number we can give once we have a more detailed timeline for the project finalized, as well as we have more feedback and clarity from our customers.
Okay, I get that point. Last question before I let you go, because you recently acquired Bulai Chemicals as well. That is for your backward integration, some technology that company has. Now this agreement that you've entered into, any more such plans or any such discussions that you're in, which will already be a part of your announced capex, or you will be incurring new capex?
No, so I think Bulichem is something which was more for our regular pharma and agro business. So again, that's something which we did because it's an opportunity which came. Similarly, this is also in lines with what we have already announced, where we had already announced that we are entering electrolytes for India focus. It's only that this technology will allow us to make better quality and give more confidence to our customer on the safety and the quality of the commercially produced electrolyte. So it was always in that line. So similarly, we've already shared, we are working on electrolyte salts as well as some cathode materials, which we will do in future. So these are something part of the battery supply chain, which we will keep considering. But as of now, there are no specific announcement or any specific tie-ups which we can share or which we have planned.
All right, so that's the management of Neogen Chemicals saying that the license is only for the India market, refused to divulge a lot of financial details. But importantly, the street likes this partnership. The stock up 5% after having seen a move in yesterday's trading session as well. With that, we'll take a short break, come back. On the other side, we'll discuss the market technicals. And boy, it is a good market this morning. 1% higher for the Nifty Bank. The Nifty up 88 points. Take a short break. Prabhudas, Leeladhar, Shilpa Rao will join in. It's almost a century on the Nifty this morning, and as we speak, the Nifty Bank is the one which is actually raking in the big bucks for the bulls this morning. We saw a lot of shorts being added on the Nifty Bank despite a lot of short covering that we saw in index futures yesterday. So maybe things were ripe for short covering, and Kotak Mahindra provided that trigger itself, as a result of which the Nifty Bank up almost 400 points. Important to see whether the Nifty sustains above that 17,750 mark or not. And for all of that, we have Shilpa Raut, who is joining in for a quick technical check on the market. Shilpa, we've seen a big move over the last few trading sessions, but yesterday, levels upwards of 17,700 on the Nifty saw some resistance. Do you think we have enough firepower to go beyond that now? I think you're on mute, Shilpa, so maybe, if you...
Okay. Nope. I think, Shilpa, we'll have to wait a little longer to hear you out. Let's try again. All right, we'll come back to you, Shilpa. Hopefully, we get that sorted out in the meanwhile. But, just Mangalam, on the index itself, it appears the Nifty Bank is struggling to get past that 41,300 odd mark. So, we need to keep an eye on that mark. We're going to that level numerous times, but then it's being welcomed with some selling. I think we have Shilpa back with us. Shilpa, I hope it's all clear now. Let's hear out your view on the index, both on the Nifty and the Nifty Bank.
I'm sorry about that, and good morning, Nigel and Mangalam, and thank you for having me on the show. Talking about the indices, if we see, as per yesterday, 17,600 PCR was at 1.2 today in the morning, and since then it has now increased towards 2, and even 17,700 PCR is above 1.5, which means that the support base has shifted upside, and we are good to see for targets of 17,850 to 17,980 on Nifty. Likewise, Bank Nifty also, if we analyze the option chain, we see that in between 41,000 to 41,300, there have been very active participation on the put side, which also infers that the support base has again shifted there very strongly, and we are good to see for targets of 42,000 to 42,500 on Bank Nifty.
All right, and individual stocks, what do you have on your list for us, Shilpa?
I have two buys. One would be on Cipla. Cipla trading at around 909 in futures right now. We see that it has a very strong support base at 880. So little positional targets from here should be around 975 to 990 on this. And the other one would be a buy on Tata Chemicals. Tata Chemicals also trading at around 1007 on futures right now. It is also having a strong support base at 990. So that is the stop loss. And one should look for extended targets towards 980 to 990 on that.
All right, Shilpa. Thank you so much for joining in and giving us your stock calls as well as views on the index. With that, we'll shift focus to a special segment where we get you ideas for profit daily from our colleagues at Money Control Pro. And today, Anubhav joins in.
So we believe pharma as a sector is one space to watch given significant correction in the last 1.5 years. And within this sector, Ipca Labs looks interesting. Now looking at company's operational performance, API exports have improved moderately as channel inventory is normalizing. Further, in recent quarters, certain API offerings have been relaunched after following the new process for lower impurities. Now here the company is hopeful of regaining market share from Chinese competitors as it is backward integrated. Additionally, capacity constraints are being rectified for Devas plant. About 12 APIs are under validation process, which would be followed by regulatory filings and approvals in fiscal year 24. In case of domestic formulations, expansion of field force by 25% is expected to be the key driver of presence in therapies like ortho, derma, and cardiovasculars. The sore point remains the weak EBITDA margin. Some of the expenses such as promotional cost and field force addition are structural. Some costs are transitory, like high cost inventory and analytical test setup cost. Now based on this, in a nutshell, the company guides for scaling up to 21% EBITDA margin for fiscal year 24. Coming to valuation, our stock is trading at close to long-term average, and hence investors can consider it for long-term investment horizon.
Oh, thanks a lot for that, Anubhav. For the time being, though, we'll slip into a short break. We come back and we'll continue our focus on markets. Don't go anywhere. Welcome back. Well, let's focus on a couple of stocks that are moving around. Bank of Baroda came out with a good operational update. Abhishek joins us to give us a quick analysis on that one. Abhishek?
Well, it's for the first time that Bank of Baroda has given an operational update in terms of the business parameters. So amazing business momentum continues for second quarter in a row like we saw in Q3. So Q4, the deposits are up 15% YOY and about 4.7% sequentially. The domestic deposits are up 13% YOY and about 4.3% sequentially. International deposit momentum was robust at more than 31% YOY and more than 7% sequentially. The domestic CASA ratio has improved on a sequential basis. Loan growth pretty strong, coming in at 19% YOY and about 5.4% sequentially, while domestic loan growth is nearly about 17% YOY and about 5.2% sequentially. So the international advances, that momentum has been robust at 30% YOY and about 6.5% sequentially. In the domestic loan growth, they saw retail loan growth being at 27% YOY and about close to 7% sequentially. So you saw the global CD ratio or credit deposit ratio improve both YOY and net sequentially. So the net interest margin can remain stable or improve on a YOY and quarter-on-quarter basis. Back to you.
All right, Abhishek, thanks a lot for that. That explains why Bank of Baroda is up 3% this morning, but a lot of stocks are higher today, nearly 3 stocks in the green for 1 in the red. So let's talk about a few underperformers. ABB is one of those rare underperformers, in fact, the top F&O loser today, and this after Kotak Institutional Equities has downgraded the stock, and they have a rationale for that. What is the rationale? Vivek joins in to tell us more about this. Vivek.
Well, absolutely. So Kotak Institutional Equities, like you mentioned, has downgraded the stock to a reduced rating from a buy stance that they had earlier. What they've done is, they've gone ahead and said that after the recent stock rally, valuations at this point of time are no longer very attractive. In fact, the analysis that they've done or the assessment that they've done of the annual report of 2022 falls short of justifying the sustainability of the sharp improvement as far as margin as well as working capital trends are in the year gone by. So on the back of that, you're seeing this downgrade. Also, what they're saying is that the 200 basis points year-on-year gross margin expansion as well as the low 10 days of working capital that has yielded the company almost a 37% post-tax return on invested capital, that is the ROIC for ABB, they believe at this point of time may be hard to grow and sustain. So high valuations as well as the kind of return ratios that the company saw in 2022, Kotak believes may not be sustainable for a prolonged period of time, and which is why they've gone ahead and downgraded the stock by a notch to a reduced rating.
Thanks a lot for that, Vivek. Well, Shilpa Medicare, that's been a big underperformer over the last 18 months or so, but it's surging in trade. Remember, they received a US FDA nod for an arthritis drug. Ekta joins us to run us through those details. Ekta?
Thanks for that. Well, yes, Shilpa Medicare is in focus. It's up around 9%. That's because they've received the final US FDA nod for apremilast tablets, which is basically a drug which is used for the treatment of active psoriatic arthritis. Now, the product is executed from a contract manufacturing site. The market size of the drug is around $3.55 billion. Now, why is this positive? Is because remember that one of the company's main units for formulations, which is basically their Jadcherla unit, was issued an import alert by the US FDA in 2021. The company had indicated they have finished remediation. They are awaiting a US FDA inspection, but they had indicated that there would be some amount of site transfers which would take place. Overall, this would also add to their complex product pipeline, which they are focusing on, which basically includes oncology as well as transdermals. Remember, they have a very strong focus in terms of oncology, and they are making headways in terms of other markets when they are launching complex products, if it isn't the US market. So this should be assumed to be a positive, that they are managing to launch a drug in the US market despite one of their sites being under import alert since 2021. Like you mentioned, the stock has been an underperformer. It's down 49% from its 52-week high and is just about 15% away from its 52-week low.
All right, Ekta, thanks a lot for that. That explains why there is a big move on Shilpa Medicare today. What we'll do is actually take a short break, come back, and on the other side, we'll have the team of Trading Hour for you.